And the continued push by the Central Bank of Nigeria for a paperless economy is being used by banks and financial technology companies with strong e-pay systems to achieve greater growth. To guarantee that the goals of its cashless policy are met, the CBN implemented strict regulations on withdrawing significant amounts of physical cash from banks. Early in December, the Apex Bank reduced the maximum amounts that could be withdrawn in cash through ATMs, point-of-sale terminals, and over-the-counter. Well, to discuss these stories further, we're joined here in the studio by Arise business analyst Chika Mbonu. Chika, thanks very much for joining us.
Thank God it's Friday.
Great to see you.
Yeah, thank you.
So, some companies in the fintech space are benefiting from the CBN's cashless policy. What more can you tell us?
Okay, first, public service announcement. Nigerian citizens, please, January 31st is coming here. Go and change your old notes into new notes.
Get the new notes.
The new notes, yeah. Almost all the ATMs now are dispensing new notes. Now, co-joining the desire or the policy to move to new notes, the CBN brought out this policy about cash limits. The macro objective has been to reduce the volume of cash in the economy. The figure that CBN pushed out showed that more than 2.5 trillion of the cash is not in banks, it's not anywhere, it's in under people's beds and so on and so forth. And so the central bank felt that we need to bring that into the banking system and also reduce the limit for the withdrawals from ATMs. Initially, for individuals, 100,000 naira per week, and corporates, 500,000 per week. However, because of the protests, the figures were moved to individuals 500,000 per week, and then corporates 5 million per week. Now, what's happened therefore is that people are still saying that even though CBN moved the rates, the limits upwards, that because the culture of Nigerians to deal with cash, it is going to hurt trade. Now, but what's happening is that if you know you don't have cash, what will you do? You have to migrate to e-commerce. You have to migrate to alternative channels. And so what's happening now is that it's become a boom for the banks and the fintech companies who are signing out new mandates from a lot of customers.
Right, so it seems like it's one man's loss is another man's gain.
Yes, another man's.
But let's talk more about the new note design and the implications, because as you say, the 31st is creeping up on us, not far away at all. And it's very easy for us here to say, oh, you've got to get your new notes, you've got to get your new notes. I was at an ATM 2 days ago. I was getting old notes, right, here in Lagos. So what are we expecting, what's going to happen on the 31st? Will the banks look like a filling station in Oshodi, huge queues as people desperately try to get rid of this money?
I thank you for it. I like your analogy. Filling station in Oshodi, at least we know what this issue now. The issue again now is about the petrol scarcity. So I like that analogy. You didn't talk about the food pantry or any other thing. You just used the filling station. And now, our citizens always have what they call lastminute.com. They like doing things at last minute. And at each forum that I've been to, I have always told people that go and change your new notes. Some people are hoping that Central Bank will extend the deadline from January 31st to something else, but that's not going to happen. And like when they did the national identity card stuff, a lot of people waited for the last minute. Voter registration, a lot of people waited for the last minute. I had told those who work in banks, especially the cash counters, to be ready for the rush next week. Next week, you're going to see a lot of people and who are expecting Central Bank to extend the deadline. When they are sure Central Bank is not extending the deadline, what's going to happen, as you said, is we're going to see a lot of queues inside the banks.
Right, so let's talk about some people who are losing cash, giving their cash away involuntarily, briefly. Small borrowers, who are suffering because of the hikes in interest rates. What more can you tell us briefly?
The thing about lending in Nigeria is this, that, of course, you already defined the monetary policy rate. That's the benchmark rate in Nigeria. Basically, is the rate at which Central Bank of Nigeria and the banks interchange money. Now, whenever that rate is altered, the banks are supposed to go home and alter the rates, deposit rates and lending rates. Now, but what we have found out is this, but in this case, for 4 times throughout 2022, Central Bank has pushed the rates up. Remember, we talked about the fight for inflation. That's what the worldwide challenge. But what has happened is that each time the rates move up, the banks move up their lending rates. But they don't proportionately move up their deposit rates. And those who suffer are the SMEs, the small and medium enterprises. And that's what's going to happen.
Arise business analyst Chika Mbonu, always great to see you. Thanks for being with us.
Thanks a lot.